One of the things I've noticed recently, and you had been mentioning as an early stage investor in India, there's some companies that are indigenously Indian but addressing sort of Western U.S. markets. One thing I've noticed over the last year or so is that those types of companies are coming here, and they're actually in a position to disrupt what we would consider here in the Valley as growth stage startups. So what, on the ground in India, what do you see? What's the strategy of a founder or an investor there? Is building a company in India, maybe has an office or some employees here, and could they actually disrupt Silicon Valley companies, right? Either on price or some type of technology.
Yeah. Um, the shorthand we use for those sorts of companies is the Israel model, right? Companies that started in Israel but came over here for sales and marketing, and we've seen that for the last 20 years happening again and again. Part of the reason is that Israel's got the defense forces that produce a lot of wireless and security technology, and part of the reason is the market there is too small to really create a big company, so they come here. In India, if you look at it, it's a curious mix of China and Israel, where you've got a big domestic consumer base, and we talked about companies targeting that market, but there's also not a large enterprise spend over there on technologies. Those companies tend to come here. What we're seeing in the last couple of years, and I think we'll see more of it, and one of the reasons I'm here in Silicon Valley right now as well, is to leverage and build this ecosystem around US-India Corridor 2.0. 1.0 was services, outsourcing, 2.0 is products. And we're seeing several such initiatives in India. NASSCOM, which is an industry body in India representing software companies and product companies as well as services companies, has got this initiative to fund 10,000 product startups. And we're seeing them funded slowly but surely. These companies, in my opinion, are targeting low barrier to entry mature markets in the US to begin with. CRM is a classic area. And we see companies like Freshdesk, Unmetric, Kayako, and others in India target that. And these companies, you can think of them as fast follower companies in many cases. That segment, whether it's social media monitoring in the US, whether it's help desk software, whether it's customer service software, already exists here. People are searching for those keywords on Google, and therefore these companies can buy those keywords and acquire customers that way to self-serve themselves through a SaaS solution that these companies produce in India. So that you can get started that way and make inroads into the SMB market here. Some of those companies are priced lower than here, with Zendesk, for example, in the customer service market. Some of those companies in India are priced lower, a little bit lower. But what we find in mature markets is that there are always underserved customer segments as well. And some of these companies have really understood the solutions in the market and are going after that and are growing very, very fast, 100% plus a year. In general, if you look at the SaaS companies in India trying this, I've seen very few that have gone above the $1 million annual recurring revenue mark right now. But there are some that have gone above to the $3 to $5 million level, and those become very, very financeable. What you see also in India is because of the friction in the market, some of these companies have taken 10 years to get to the point they are right now. But now that they've solved these friction problems, they're ready to scale. They just need some capital. So again, unlike the market here, you typically won't see a Series A being done for a $5 million revenue company, but you might see more of that happening in India.